I want to simplify something that's really important that you've probably heard a lot about, but it goes right over your head. You don't understand it, and I want to explain it because it's so important. It's the 10-year Treasury note. Try not to fall asleep. I'll make this interesting. Why is this so important? This is a market-based rate that really is closely related to mortgage rates, other interest rates that you pay, or if you're a saver, other rates that you receive. And the reason I say this is so important is that when Donald Trump on election night got elected, the next day we saw that the stock market went way up. This was not unexpected. I thought a relief rally, but more so in his case because the stock market tends to like deregulation, spending, tax cuts. But also what people didn't see as much is that the 10-year Treasury note went up as well. That is not good, because that rate is really, it's a market-based rate that reflects investor sentiment, inflation outlook, and it's really tied to the overall economic health of the economy. And so we see, by contrast, the Fed funds rate, which the Federal Reserve, the FOMC, the Federal Open Market Committee, sets. 2 days after the election, they cut that rate. This is a short-term rate versus the 10-year Treasury, a long-term rate. So they are related, but they are different. The 10-year Treasury is a market-based rate. Pay close attention to that, because that is a strong reflection of the health of the economy and forward expectations. So that rate went up, not down. We are seeing rates going up, for example, on some of the fixed offerings like fixed annuities. Those rates are actually going up despite the Fed funds rate cut. It seems that the Fed may stop cutting rates, or at least slow them down cutting. And if the reason that this is happening also is the market thinks a lot of the proposed policies are inflationary, that we're having big spending, big deficits. And again, when that rate goes up, it becomes more expensive to finance the interest on the debt. So that 10-year Treasury rate is incredibly important. A lot of these programs, from rounding up 11 million people to building a wall, multi-billion dollars, Mitch McConnell says more defense spending, and yet tax cuts. The gap, the numbers don't add up. Saving Social Security and Medicare, other videos coming up on those, but not raising taxes. It's just spend, 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 tax cut, more deficits. The market is telling us we are worried about this. Remember 2022, we had all of these interest rate increases, the stock market went down. We could be going through something similar if this trend continues. Mortgage rates are going up, not down. Pay attention to the 10-year Treasury note.